What's up, everyone? Welcome back to the RP Experience. I'm your host, Andrew Regenhard, with Real Producers, and today we're going to be talking with Corey Walker with Brown & Brown Insurance. Brown & Brown Insurance is a valued partner with Real Producers. Corey, it's great having you on here. Thanks for joining us today.
Hey, appreciate you having me, Andrew.
Of course. So Corey is a private client advisor and vice president with Brown & Brown Insurance. Corey grew up in Pensacola, Florida. So he's a Florida native with an interest in aviation, something we share. And however, Corey decided to take a different path in life and has been with Brown & Brown Insurance for over 7 years. As a private client advisor, Corey specializes in building those customizable insurance programs that meets the unique needs of his clients here in Southwest Florida. So excited to have you. All right, well, let's dive in. Today's topic is going to be trying to peel back the onion in the sense and understand the differences between kind of the different levels of insurance, what kind of goes into it, how do you even go about picking insurance, and just understanding those unique situations when you really should have the insurance, even though nothing has happened yet. And that's our main goal today. So, one of the things is people always are curious, well, what changes insurance, or why are rates sometimes higher and then sometimes lower? Some people think it's, during a recession or different things like that. So what are some things that impact an insurance rate?
It's multifaceted. There's things that go on as far as like capital in the market. So coming up right now with home insurance, there's a lot of talk about insurance companies becoming insolvent. And a lot of that's because the insurance companies rely on what's called reinsurance. So these companies buy insurance just like you buy insurance for your car, except for they're buying it from companies like Swiss Re, which is a global reinsurance company for insurance companies, along with catastrophic major risks.
So correct me if I'm wrong here. They're buying it in bulk in a sense. And so they're buying a ton of insurance and then they're saying, okay, we got it at this rate. So, Joe Schmo, Bob.
Not exactly.
No?
No. So actually what it is, they're on the hook for the first, let's just say, make up a number, $1 billion.
Okay.
Or $500 million. And then they're buying catastrophic coverage in excess of that. So following Irma, I don't have the exact detail. I'm terrible with remembering numbers of that nature. But Irma was a multi-billion-dollar event that impacted Southwest Florida as well as the whole coast. It was really impactful along the east coast of Florida with flooding. And then across the nation, we've had multiple multi-billion-dollar events. So these insurance companies can't carry that much risk themselves. So they buy this reinsurance policy for these events that exceed what they are able to do on multiple-year events so that they can be cash flow and safe. And now the problem with that is that we've had multiple multi-billion-dollar events across the globe, and specifically here in the Florida market, multiple years in a row. So these insurance companies are now going up for their renewals on these reinsurance contracts, and that's what's happened with several of the companies that have just recently become insolvent because they actually couldn't afford to buy their reinsurance. So they couldn't keep the financial, they couldn't make their financial responsibilities to the state to continue to operate. So right now there's another reinsurance contract renewal that's coming up on 6/1, which is going to impact most of the insurance companies that operate in Florida.
So it's really their insurance for insurance in a sense, right? So like they all have the certain amount. They're like, yep, you get in a blah, 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 boating accident of this or whatever it might be. Here you go, you're good. But you're saying when it goes catastrophic, everything's going to be maxed out and they have to have insurance, obviously, that's above and beyond to cover those people. So it's the insurance for the insurance companies.
On a catastrophic basis. So it's similar to you and I may buy an umbrella policy. So that gives you extra liability over what you have primary, except for the primary coverage in this case is the financial assets of the insurance company. But let's say, for example, if you were in a major boating accident and maybe somebody was killed, it unfortunately does happen, and that's why you do buy catastrophic insurance. And your umbrella policy will then step in, help defend you, and potentially pay up to the settlement or the policy limit. So that's one reason why we generally recommend to the families we're working with that have significant assets to look at a $5 million to $10 million plus liability umbrella.
So explain. I mean, I understand what an umbrella is, and it would probably cover you from everything, right? And that's probably the sense of what they're trying to market by saying umbrella. But like, why wouldn't I just get typical boater's insurance rather than an umbrella. Can you explain the difference between the two?
Sure. So you want both is the answer.
Okay.
Typically, boat insurance is going to cap out at $500,000 to $1 million on the policy.
Okay.
So that's not enough if you unfortunately killed somebody in an accident, or even a car accident or something of that nature.
So, and I don't mean to interrupt, but like when you say, like, let's say if you have a boat and you crash it in the dock because heavy winds and it structurally damaged the boat, and you're saying that boat insurance, that's what that's for, right? It's to, let's say, get a new boat or whatever, fix the damages up to a certain amount. But you're saying then the umbrella is the above.
So let's say, for example, you have a boat, right?
Mm-hmm.
Okay. Think about your boat. Let's say, for example, if there was a bad day or you had an engine failure, think about the other boats around your boat. What's the value of those boats? Now, what's the cost of potential damage under this? And I've seen this happen. What's the cost of damage potentially if you lost control of your vessel while you're docking it or leaving the dock, an engine failure? It actually happened to a client recently, and you weren't able to regain control. Either the winds were too strong, the current was too strong, and it pushed you into those other boats, and you caused damage to them.
Mm-hmm.
How much could that damage be? I know when I look at most marinas, most of those boats are $500,000 plus.
Oh yeah, and some of those are way above that.
Yep. So imagine if things go horribly wrong, you lose control. There's been videos online where
oh my God,
something happened, especially now with some of the new electronics in boats. Yeah. It's simpler and easier to operate with the joystick on some of these triple and quad outboard motors on the bigger boats like 35-foot whalers and so forth. But the problem is, what if they go wrong? When it goes wrong is when you're now going to be named in this lawsuit, and $500,000 may not be enough. If it's just a bump, if you just bump the other boats, maybe it'd be fine. But what if there was somebody that was on that boat and got thrown overboard now and they died?
Yeah. You say that example, and one of my good friends is a tech and works on all these boats, and he's a captain to one of these boats. And when the gentleman was buying a new boat that he captains, he told him that he won't drive the boat with the joystick. And the guy was like, "What? What do you mean? Isn't that the latest and coolest, greatest thing?" He goes, "Yeah, it is, until it doesn't work or it malfunction." And it happened to him one time. He said he was going like 40 miles an hour, and one of the engines, because of the electronics built in, kind of haywired, and one of the engines went like sideways almost and threw the whole boat sideways. Like, they didn't crash, but they almost did. And it's just, you never know what's going to happen. So interesting. So the umbrella is really the above and beyond. So
it's the above and beyond and the uncertainty.
Okay.
So that's kind of the way to think about it. And in today's world, you have to think, how many times do we hear these advertisements for attorneys?
Mm-hmm. Right.
I mean, I was actually in jury duty the other day, and I heard advertisements for attorneys while I was sitting in jury.
It's everywhere, right?
It's everywhere. And the truth of the matter is, they serve a purpose, and they're a check and a balance, and they do help people recover what they're entitled to and what they should be able to go for somebody else's wrong.
Mm-hmm.
And we need that in society because it does help. But at the same time, if you don't have the right planning in place, your entire hard work can be wiped out. So in many cases, the families that we work with here in the Southwest Florida communities have done extremely well for themselves by all means. Mm-hmm. So a lot of times, what most people may have, they have an extra zero behind their name. If they're buying a boat, it's not a $300,000 boat, it's a $3 million boat. Mm-hmm. It's not a $30,000 boat, it's a $300,000 boat. Mm-hmm. And most of my clients are typically right now buying boats that have a value of $500,000 to $1 million plus. The 35-foot whalers with triples or quads are running $600,000 to $800,000 on average, depending on the setup and the specs that they have. And that's a normal boat for my clients that they're purchasing.
Oh, for sure.
So when they go wrong, things can go wrong to a horrible degree, and the damage is more significant.
Right.
And that's where they need that level of protection.
Goes back to what my dad always said, better to be safe than sorry. So now let's switch gears a little bit. I want to dive in and kind of talk about what the BOP, or business owner policy. A lot of realtors we work with, a lot of businesses that we work with, obviously are business owners. Can you explain a bit more what a business owner policy is versus, a car and auto?
No. So that's a great, it's a truthful answer. The reason why I can't do that, Andrew, and I can talk about it to some degree, and I'm glad to, But at Brown & Brown, we operate in kind of like specializations.
Oh,
so
okay.
my specialization is working solely with extremely successful families that have really complex personal insurance matters. They usually have properties in multiple states. They have maybe a fleet of vehicles, usually about 6 or plus, typically 10 or more. It's not uncommon. Their homes are usually owned in LLCs or trusts. They have typically assets in excess of $25 million. And their life is complex. They live in multiple states. They live in exotic places. The insurance isn't always easy to secure. And then we have a whole nother division at Brown & Brown. This is what makes us very unique in the way that we can best service our clients is we actually have specialists at our company that do solely business insurance.
Gotcha.
And then we have another division that does solely health insurance for businesses. So we at Brown & Brown's actually the 6th largest insurance agency in the country. We're headquartered at Daytona, Florida. We have over 13,000 employees nationwide. And I've been fortunate enough with the community we have inside of Naples in Southwest Florida to be within their top 10 personal advisors across the country. So I've had a blessed career and a lot of fun, but my focus is really on the personal insurance side.
Right.
But to not roundabout way, not answer your question, a BOP insurance policy is designed as a business owner's policy. It's basically a group of policies that are designed to simplify it. Usually a business owner policy can give you property insurance, it can give you liability insurance, and it can give you some other added benefits. So sometimes we're able to structure BOP policies for somebody that maybe has like a small retail store. Let's say maybe even like your own operation that you have here with Southwest Real Producers. Potentially we could help cover your podcast equipment if it's yours. We can help cover your computer equipment and your general liability on a BOP policy. And it's done that way because it's more convenient and it's also more economical for the insurance companies to package everything for smaller risks and sell that. Now, on the clients that we're typically working with are going to be larger businesses that are typically at least spending $50,000 or more on their business insurance. So some of our big clients are usually going to be like contractors here in town, landscapers. We do a lot of condo associations, a lot of businesses that own property, so either retail or apartments, rentals. We do a lot of business in that nature. And then we also are in a unique position where like my clients that I work with, I can actually introduce our company to help with their business insurance outside of the state. So last year we brought on a big contractor based out of Chicago. They spend over $3 million a year on their business insurance, which isn't a small operation. They have over 200 employees based out of the Midwest. And we were able to step in from Southwest Florida, assist them in Chicago. And actually they fired their agent that was in Chicago. That was one of our direct competitors.
Interesting.
Because of the value that we were able to add to them
on a national
and
level.
Resolve something. And
that's awesome. So I want to switch back then to the auto and kind of home and very specific, because it kind of got me thinking the question you probably are asked all the time when in very unique situations is how do you decide how much coverage someone should have?
Yeah. So that's a tough question to answer. And the real answer is there's a multiple resources that we utilize to kind of come to that fruition. And then in some cases, clients and property owners have to be mindful that there's truthfully not an exact science on it. Now, what we try to do to assist our clients, and what actually makes my job easier because we work with higher quality companies, my companies that we typically place our clients with will actually give you extra coverage if they're short on how much insurance they give you. So let's say, for example, what's happening right now.
Okay.
Maybe you bought your house and just had it built by your contractor for $1 million last year. Okay. So the cost of building your home was $1 million. It's easy to get that. That's the easiest situation. So I don't have to run any reports. I don't have to do anything. It costs you paid your contractor $1 million. It costs $1 million. Well, it burned down last week. Construction costs are going up. Inflation's through the roof, and it's exceeding the typical 3 to 4% that people are used to and what they're acceptable. So your home's not $1,030,000 or so. It's probably going to cost you in today's world $1.25 million to rebuild that same house that you just paid for last year, because our real estate market is so hot and there's pressures on construction. and materials that have driven up the cost of construction in this area. That and reputable contractors now know they can charge X dollar a square foot for their rate.
Mm-hmm.
The ones that you want to hire are charging that because they can. So
Mm-hmm.
now you either have to go with a contractor you may not trust, you may not be familiar with.
Right.
And do you really want that person to be rebuilding your dream home?
Mm-hmm. Right.
So that's how it's decided. So we primarily work with companies that give extended reconstruction costs, so that if we're short in our estimate to rebuild your home, you still have a buffer and a peace of mind. The scary thing is a lot of the insurance companies that operate here in Florida actually do the opposite. There's something called coinsurance on most insurance policies that give you property insurance, whether if it's a business insurance policy or if it's a personal insurance policy.
Okay.
So what coinsurance is kind of what it sounds. You're a co-partner in the insurance policy. So let's say that $1 million home, you or your insurance agent suggested you only buy $500,000
Yeah.
in coverage when it should have been insured for $1 million. So you bought 50% of what you should. In the event that you had a fire or a water damage and only $100,000 in damage, instead of potentially recovering $100,000, you might only be contractually obligated by the insurer for them to pay you 50%. And how many times have you heard people say the insurance company is trying to underpay my claim?
Right.
It happens.
Mm.
And that could be one of the reasons why. Everything's situational based
Yeah.
off the claim, but it could
Yeah.
happen. And if you're in a large degree off from being correct, it could. Now, there are safeguards. Most insurance policies only require you to be 80% of value before they could potentially penalize you. But with cost of constructions booming, we're finding a lot of people are uninsured, mostly in the condo market. Condo market is really odd to me when it comes to deciding that property insurance limit. For some reason, there was some insurance agent, some book, somebody wrote on the internet down here that 20, 30 years ago that you can insure every condo unit for $50 a square foot on the interior, regardless of the luxury, the quality, the build out, and it's not correct. So there's a lot of people in the condo world that are underinsured, and a lot of them don't understand what they're responsible for. I'm in a unique position.
$50 in some of these condos, like what?
I've seen $300 plus a square foot for build out
For sure.
in some of these places.
These places are beautiful. Yeah. All right. Well, we got 3 questions that we ask every guest. All right. The first one is, how has a failure or an apparent failure set you up for later success? And do you have a favorite failure of yours?
Yeah, there's a couple. Here's a fun one. There was a job I got fired from when I first moved down here, and we're looking to potentially work with them for their insurance.
Yeah.
So I won't go into the name of the company, but yeah, I did an intern before I got into insurance for this company in a sales role, and I was always kind of ahead of speed on the program that we were doing,
Mm-hmm.
and I was always helping one of the other interns on his project. I like to help others, but I was always in his office at the wrong time when the wrong person walked by, and they kind of
Thought you were like just.
they thought I was goofing off and keeping him from being able to get his work done.
Yeah.
So I got the can like within like 2 weeks of being there. And then funny enough, in a roundabout way, because Naples is such a small community, we're actually working with them potentially for their commercial insurance. And again, this is a very large company.
Oh, that's funny.
So it could be one of our larger clients in my office down here. So
oh my gosh.
it
is so small, right?
yeah, it just gave me the drive to just always work hard.
Yeah.
I mean, it's so easy to show up, do 80%, 70% of the work. And most people do 60 to 70% of the work. Just do the extra 10, 20% and you stand out. It's so easy.
In every facet, right? A lot of people will talk fitness, right? Like you can go to the gym, but are you putting in your effort? Are you putting in that extra 10, 20%? Because that's what is going to be the changing, driving factor, the change. So that's powerful.
Yeah,
Love it.
That'll probably be one of my favorite failures.
Yeah, for sure. I love
I
it.
built contacts. I'll go apply for a bunch of jobs and get fired.
Yeah, just keep you in fire. Sir, on your resume, you keep moving around a little bit. What about when you feel overwhelmed or unfocused? Kind of lost that focus temporarily. Like, what do you do?
Yeah, so I'm big into being outside in the nature.
Okay.
I love spending time in the Everglades. I kayak a lot.
Awesome.
There was a period of time when, we'd go kayaking on the weekend, do 20 to 30 miles in a day.
Jeez.
So
It's a lot of kayaking.
it's fun. It's out in nature. It's peaceful. It's quiet.
So peaceful.
So we live out near the Rookery Bird Sanctuary
Okay.
out near Mockley. So me and my wife will go out there. It's like a 12-mile nature loop.
Nice.
See a lot of alligators,
Yeah.
nature. Seen all sorts of things. So
That's
it's
so
peaceful.
cool.
It's
Love
good
it.
to spend time with my spouse, just to walking side by side. It's easier. We find it's really easy to talk when
Mhm.
we're not staring at each other, actually.
Yeah. Yeah.
So you just feel comfortable.
Yeah, no, that's awesome. Well, last question here. What are some bad recommendations or advice that you hear in the industry?
Anything you hear from your neighbor. So that goes back to the statement about condos. I find that condos are really bad because everybody are in a close-knit community. A lot of people talk with each other, whereas in most housing communities, most people don't know their neighbors. But in a condo building, most of them know all of their
For sure.
neighbors. So we find
A lot
people
more
that are,
common grounds.
yeah,
for
a lot
them
of
to
people say, how much are you paying for your insurance? They're trying to figure out, why am I paying 3 times as much?
Yeah.
And a lot of times people don't have the right coverage. That's the truth of the matter of it. The other thing is, I'd say trying to save money on their insurance. Now, there's a time and a place to save money, but certain coverages are really important. So the one thing I would want anybody to hear from this, to take away from it, is make sure you're looking at a liability umbrella. There's 2 things that are a liability umbrella protects you from. One is the catastrophic liability responsibility. And then also, if the tables are turned, let's say somebody hits you and hurts you, and they don't have insurance, or they don't have enough insurance, or the financial assets to pay for it, you can buy what's called uninsured motorist coverage. And you know it's a good deal because Morgan & Morgan tells you, make sure you buy uninsured motorist insurance on his advertisements. So what that does is that provides you, again, with a point to recover from your own insurance company if the at-fault party doesn't have enough insurance.
Mhm.
So it's a way to carry protection for yourself, and it's not that expensive. An
Awesome.
umbrella policy, maybe for most people, $300, $400 a year to get an extra $1 million of coverage. And you just never know when a car accident's going to happen or what life may throw at you.
Mhm.
And it's
Yeah.
a safe thing. So, I mean, we can cut out the $5 coffees a day, easily fund it. There's other ways to fund it.
Yeah.
And that'd be maybe the one thing I would say. Yeah.
Awesome.
So be careful with saving money.
Yeah, love it. You know, I think it kind of goes back to is you need to spend the money to be able to set yourself up for, you know, in a situation that it was unexpected, right? And that's not the time you want to cut corners, right?
Yeah.
Like if you're going to buy insurance, you should be buying it and you shouldn't be cutting corners. If you don't want to buy it, then don't buy it, right? But you reap, you know, you obviously have to deal with the consequences.
Yeah,
So,
there's a lot of people that buy insurance and they wind up with an expensive piece of paper.
yeah.
So if you cut out all the good stuff, you can start spending a lot of money and you're wasting it.
Yeah.
So it's really, find a trusted advisor that you can connect with and that will educate you so that you can make the decision for them yourself.
And you can call them and ask questions and, you know, all that kind of stuff.
Absolutely. They shouldn't dictate what you should purchase and they shouldn't tell you what you should purchase.
Yeah.
They should educate you and you should make the decision.
Love it. Love it. Corey, thank you so much for joining us today. It's been an absolute pleasure chatting with you.
Cool. Thanks for having me, Andrew. Love it.
Yeah. So as always, RP Experience is extremely thrilled to have you on here. We're here at Venture X in the podcast studio. Don't forget to like, subscribe, and stay tuned for the next episode. Thanks, guys.
See you guys.